Well, it was expected to be a good quarter for the entire cement pack, and ACC, the expectations going into the quarter was quite high, given the fact that the volumes had recovered post the monsoon season, post the lockdown, and also AT now had conducted various dealer checks where we had indicated that a lot of the companies had actually started seeing green shoots as revival as well. So pent-up demand, green shoots as revival, as well as an improved pricing as well as demand environment was something that the street was anticipating, as well as pricing in as far as ACC as well as the cement universe was concerned. However, when you're talking about the results itself, the numbers are extremely strong, much above what the 18-hour and poll was anticipating, and in fact, much above what most of the analysts on the street were penciling in. Now, this leaves surprise and this leaves scope for further upside as far as the stock price is concerned, given the fact that there could be a re-rating for the entire cement pack. Revenues have come in flat on a year-on-year basis. However, there has been an uptick of close to 1% on a year-on-year basis, and close to 6.5 million tons is the kind of volume offtake that ACC has seen, and this is something that the street will remain quite enthused by. When you're talking about the profitability has surged almost 21% on a year-on-year basis, indicating the strong operational performance of the company. The EBITDA coming in at 671 crore, up almost 23% on a year-on-year basis, with the margins expanding by a little over 200 basis points. Now remember, margins were expected to be under pressure on the back of higher input costs, but what the company is saying is that there has been an improved pricing environment, improved segment mix as far as the company products were concerned, and on the back of this, have a look at the EBITDA per ton figure, an important figure for the entire cement pack. It has come in at close to 1,015 per ton versus 811 on a year-on-year basis. So clearly, it appears as though the MSA agreement with Ambuja is something that is aiding as well as encouraging the company to cut costs and thereby improve operational efficiencies. What the management is saying is that as far as the demand revival is concerned, management is saying rural and retail sales is something that has actually led to a comeback as far as demand is concerned. However, what they are cautioning is that the urban demand is yet to recover fully on the back of the COVID situation. Now, what the company is also saying is that the company has had significant source optimization as well as negotiations, also saying efficient supply chain management actually helped improve the results of the company. The company, in terms of freight and forwarding costs, actually saw a decline despite a rise in fuel costs on the back of the fact that higher direct deliveries as well as warehouse space optimization has again helped reduce the operating costs of the company. Fixed costs too saw quite a bit of change, and this is something that has actually led to quite a bit of a strong result as far as ACC is concerned.